Well, it must have been a pretty action-packed first day in the job for Bank of Queensland's new Managing Director and Chief Executive Officer. Stuart Grimshaw takes over the reins after a 10-year stint by his predecessor David Liddy, whose strategy to grow the bank beyond Queensland borders looks like it will be continued. And Stuart Grimshaw joins me now from Brisbane. Stuart, welcome to the programme.
Thanks very much.
Well, here we are. In your first day in the job, we've got a big change of rates. You, I presume, will be passing that 25 basis points on to customers.
Yes, we've already done that. We passed it on not long after the announcement this afternoon. And so for all our customers, I think it was great news, particularly this time when we know that it's pretty tight with most households.
One of the things that's happened, of course, David Liddy left the bank in not quite such good order as some might have thought, say 6 to 12 months ago. Your share price has fallen about 20%, I think, this year.
Yeah, I think that's right. I think I wouldn't say it was anything to do with David. The Queensland floods and also just some of the lagging effect of the household incomes has come through, and certainly our arrears did tip up earlier in the year, but in the second half we saw that coming more under control, and we're quite positive on the outlook for the bank in the years ahead.
Moody's has recently put some of your debt on review precisely because of both the arrears that you were talking about and also mortgage debt. Is that really changing this half?
Look, we do have quite a large exposure to the mortgage book. About 70% of our lending is in mortgages, so that's a fact of who we are, and we've always been that way. Certainly they have indicated that a concentration in Queensland, they see that as a bit of an issue. We are quite positive on the Queensland economy, but also you've got to overlay the fact that globally there is a lot of concern over financial institutions, and also when you look at Australia, we do have quite a proportionate imbalance of our wholesale lending where we are net lenders in the global markets, and Moody's have indicated that as a source of some of their ratings concerns at the moment too. Because
you are a smaller bank, it means that wholesale funding is going to be more costly to achieve when you go back to those markets than, I guess, the bigger banks. To what extent are you going to be able to be competitive?
Well, we don't often just compete on price. We actually look at how we're trying to make the bank as personal as we can so that we do know our customers well. And price is one of the components that we do have to compete on. But if you look at our cost-to-income ratio, we're running it under 45%, which is very competitive. So we're trying to run the business as lean and efficiently as possible while still presenting our customers with great opportunities and outcomes.
Yeah. Going back to your debt profile, how do you imagine, looking forward 12 months, these arrears are going to go, particularly on the 90-day payback?
Yeah, no, look, the 90 days did tip up. We're pretty hopeful that we have the management around it now to keep it fairly much under control, and we have started to see some relief in that area, which is pleasing to see. But it is something that we are monitoring closely, and hopefully if the economic conditions remain reasonably benign for us, we should see a steady influence through that over the next 12 months.
Given that Moody's, they've seemed to have singled you out, really, as the bank that they are looking at the moment. But, of course, the whole of the banking sector in Australia is under a bit of a watch with wholesale funding. It's a problem that they all have. To what extent do you think the sector is concerned about what is going on in Europe and the sorts of impact that might have in terms of accessing the wholesale market?
Yeah, no, it's a pretty good question. I mean, every day we watch Europe, the story changes. Even now with the Greeks going for a referendum, the whole ball game keeps changing on a regular basis. And what we're seeing now is the sovereign governments having to stand behind some of the bank debt in Europe to be attractive in the market. So that could put us at a bit of a disadvantage if that does occur. Most of the lending being done by the banks now domestically are actually being funded by the liabilities, the deposits that are coming in. So on a net debt basis, the funding requirements from the banks has actually been reduced, but as the rollover of the debt, that will become interesting as we go forward.
And of course, presumably, a lot of the fund money comes from the US. If there is a real crisis, is there a risk that will dry up?
Well, we've seen it dry up before, which is why the government stepped in to do that, and also with some of the ratings that of some of the banks, some of the fixed interest funds don't have the capacity to actually take their paper because they have tight constraints of the quality that they do take. We're pretty hopeful that the markets will remain open, but what we see is when the markets get nervous, the investors actually want a much shorter duration. So typically getting 3 to 5 year money could become harder if there is more nervousness through the financial sector globally.
Now, Stuart, you've worked at both National Australia Bank and the Commonwealth Bank. I see that your strategy is to bring down your Queensland business to 50% over the next 5 years. You're obviously going to have to compete with the big four out there. How are you going to do that?
Well, we've always made an effort of trying to be different to the other banks. We're not a major bank, we are smaller, and we don't compete on the same scale basis as they do, but we try to be close into the communities. We try and make a difference. We can't compete across all fronts, but what we do compete, we try and bring value through our people, which really are the best asset we do have to compete with. And over the next 5 years, we'll be working to see how we do grow that business more.
Stuart Grimshaw, I wish you very much a lot of luck in the job, and we'll talk to you, I hope, through the year.
Yeah, thanks very much for your time.